Now, over in China, a property crisis that's entering its fifth year, downbeat consumption and prospects of even more tariffs as Trump takes over the White House continues to impact the world's second largest economy's growth prospects. And joining me to discuss this in greater detail is Head of Strategy at Prescient China, Tian. Tian, thanks so much for joining us today. Now, the Chinese economy has been under pressure for quite some time, and we've seen a number of stimulus measures being unveiled, some directly targeting the struggling property crisis, others targeting overall growth. Despite this, it seems like we're still in the same position. Correct me if I'm wrong there. Are these measures actually working, Tian?
Yeah, absolutely. I think stimulus measures were first announced late September last year, and that was when the government realized the economy was probably in quite a bit more trouble than they initially thought. And it was a good sign that they did enact on quite a lot of monetary and fiscal policies to support the economy. So typically, we need a bit of a lead time of around 6 to 8 months before we start to see initial results. So it probably does make sense that we haven't seen anything concrete happen in the economy. We did see official announcements from governments that they have likely reached the 5% per annum growth GDP target for 2024. So that's a good sign. So for 2025, we should see more stabilization in terms of growth prospects for the economy, although we're not out of the woods just yet.
That was going to be my next question, whether we will see China hitting that 5% growth target. Reflecting on what we've seen play out, Q1, we saw growth of 5.3%. The second quarter, we saw growth of 4.7%. And then it slowed further in the third quarter to 4.6%. Where's your head at? Do you believe that, the government has hit the nail on the head with that 5% target come at the end of 2024, when those numbers come out?
Yeah, I think the 5% target is more psychological than anything. So whether we are at 4.8 or 5.2, it really doesn't make too much of a difference. But if we don't hit that 5% mark or get close to the actual 5% number, it would be a big sort of knock on confidence going forward. So I think the government actually treats that 5% or around 5% target very, very seriously. And it's encouraging that we should get a number that's very, very close to 5%, seeing that President Xi Jinping has already officially said that we've probably reached the 5% target. So the official number is still to be released, but I expect the number to come out very close.
Let's now talk about the risks to, economic growth. As I mentioned, that property crisis entering its fifth year, not much signs of a recovery on that front. Talk to me about the issues plaguing that sector and when we can actually start seeing a turnaround taking place there.
Yeah, so the property crisis has been going on, at least in our view, since about 2018, where we started to see signs of small cracks. So it's been, in our view, sort of 6 years in the running. We are seeing some stabilization, but if we have to really go back almost a decade or more than a decade, back to the 2008 global financial crisis, and with a lot of monetary easing back then to help support the economy and stabilize the economy. That sort of sowed the seeds to the property bubble, which then generates or encouraged a lot of investments, inefficient investments into the property sector. We probably now have to pay the price for it. It's been officially since sort of the 3 red lines that were introduced back in 2020, 2021, into the restrictions on property sector companies taking on excessive debt that limited their borrowing abilities, eventually led a very quick summary to sort of the crumbling down of the property bubble. And over the long term, we think it's a healthy development, but in the short term, it's quite a lot of pain. So last quarter, we saw some stabilization in the numbers, but values in a lot of areas are still inflated, but we are seeing interest rates come down quite a lot, and that will help stabilize the sector. The government's put in a lot of policies, a lot of support to ensure that the sector does not collapse, because it is quite a critical sector of the economy. All the policies are to manage its decline, to make sure it's stable. A stable decline just ensures that the economy will continue to function in a stable manner.
So those, those stimulus measures working their way through that property sector. Another issue China is dealing with is low consumption. We are seeing the Chinese tighten their purse strings. From, someone that's actually living in China, what's the sentiment on the ground? I mean, there was a time one of my colleagues spoke to the CEO of Naspers, Fabrizio Blasi, and they paid a visit to China, and they said everything is good, everything's great, and that, the newspapers, the headlines are making it seem like matters are worse, but on the ground, things seem to be good.
Yes, if you do visit China, things actually do look great. I mean, restaurants are packed, malls are packed, but I think it's in the finer numbers and the finer details that retail consumption is lacking. We are still seeing small growth in retail consumption, but nowhere near the rates as before. So it's a combination of various factors. One of the major contributors, the property factor that you mentioned earlier. Majority of Chinese household wealth is in properties, and with the property decline, the average Chinese person feels less wealthy. And then we also have the past couple of years of COVID, economic slowdown, more sort of economic slowdown leading to not as prosperous growth prospects, less job openings, less job promotion prospects. All of this contributes to sort of the emotional impact of spending. So if you are less certain about a very prosperous financial future, you are less willing to spend. So, for example, people are choosing to upgrade their mobile phones every 3 years rather than 2 years.
Yeah.
So all of a sudden, if you upgrade 2 years to 3 years, it's a 50% reduction or 50% increase in the length of time that you hold on to an asset. So on average, consumption is dropping, or growth in consumption is dropping. So all of these combinations of factors are contributing to that. We are seeing slow pickup, for example, in tourism spending, number of trips taken. We hopefully will see better numbers in the upcoming Chinese New Year, end of this month.
So we also have, those U.S.-China trade tensions coming to the fore with, Trump stepping in as president from the 20th of January. I mean, I guess some of the tariffs have been priced in, right? But I think the last time you spoke to Zinati, you did say that Trump is more open for negotiations when it comes to China. And we recently, had Trump actually approach the U.S. Supreme Court asking them to hold off on the law to ban TikTok in the States. How do you view that move? Does it come across as just a bit more positive when it comes to relations between U.S. and China?
Absolutely. I think we've always been of the view that Trump winning the elections would have a lot more potential to bring positive surprises to China-US relations. I mean, we all know that China-US relations have been on ice for quite some time, and it seems like the market have priced in everything in terms of the worst-case scenarios on bilateral relations between the two countries. So gestures like what you mentioned, Trump mentioned that he'll try and stop the ban of TikTok, his gesture of inviting President Xi Jinping to his inauguration, although that's unlikely to happen. All of these things are sort of positive potential surprises for bilateral relations. If you look at the blanket tariffs of 60% he mentioned during his campaign, and then afterwards he mentioned 10% tariffs on China, but 25% tariffs on Canada and Mexico, which are close allies, it's again a positive development for China. So given that relations are already so poor between China and the US, and very little more room to add tariffs, we believe there's actually more room for positive surprises than negative. The markets are already pricing a lot of the bad news, so not too concerned about the downside at the moment.
All right, Tian, unfortunately, we have to leave it there. Thanks for sharing those insights. That was Tian Pan from Prescient, China.